All right, traders, let's get started here. Let's take a look at some of the foreign exchange currency markets. I've got the USD CHF up on the chart. Had a couple of really nice trend lines here that have been broken. You'll note most recently that we've had a high-to-high trend line right here. We recently took that out, pressed to a new structure high higher close here at 99.41. A whopping 40 pips since then. What I want to do is I want to add the ATR so we can also look at volatility across the board here. Yeah, a couple of things to do when you're looking at your higher time frame is a recognition of volatility. So you'll note right here as the market is declining, right here, you see an increase in volatility. So we see a sideways trade right here in the market. Let's go ahead and identify that. Grab the rectangle. Majority of the price actions contained right here. We had one day where we traded below, closed below. The very next candle, we opened at the prior session's close, rallied right back up above 9,900. So it's a 75 pip trading range, and we were inside of that for 3 weeks. Now, this is the summer trade. We kind of anticipate this during the summer. Right here, you'll note that our volatility was 70 pips. Volatility declines here to go retest a 2-month low at around 50 pips, and then declines all the way down to 45 pips a day. We start to rally right here. Volatility does. The RSI goes oversold, and then right here we get a trade below, close below. And this particular candle, at a time when our volatility is about 50 pips a day, this has a high to low trading range, 99.22 to 98.43 of about 80 pips. So we break down and then sell off from 98.50s to 95.50, a 300 pip move. And you can see average true range increasing during that directional move. And then right here, again, we hit a secondary peak. So USD CHF, not a lot of directional movement. Majority of the trade spent in a 500 pip or 300 pip zone with a little excursion outside of that right here. But you can see we rallied right back up, put in a symmetrical double top at the 101 handle, pulled right back down. Here was previous structure support down at the 98 level. So recently here over the last 2.5 months, 300 pip trading range. So as we take a look at the USD CHF, best opportunity would be any retest potentially on the daily bar at around that 101.08 level, and then potentially a retest down here where we had basically a quadruple low at $98. So right here we're sitting right in the middle at the 50% fib, basically no man's land. Okay, let's look at the USD JPY. Higher time frame analysis. Okay, USD JPI or JPY, same type of analysis. You'll note right here, very stagnant volatility. Okay, so again, I want you to know this is the average true range. So let's type this on the chart. This can help you tremendously in your trading. Average true range, and then the setting on this that I use is 7. And literally it's telling me what's the average true range for this particular market over the last 7 bars of data. In this case, I've applied it to a daily bar. Okay, so ATR 7 at the bottom of the chart. Now, you'll note average true range has price action patterns similar to a regular price action bar. Here's a double top in the ATR, and then you see right here we have a reversal in the trade. Majority of the time spent between 80 pips a day. We put in a double bottom down here at 47 pips a day on the USD JPY. So anytime we see a market that has tighter ranges, we can identify significant swing highs, significant swing lows, and then look to trade at or near those lows using the SOS model. Now you'll note right here, see the structure right here? See price rolling back down into this 110 handle on the US yen. So at this price point, as we move back down to it, you'll note volatility or average true range is increasing. The average true range of the daily bar, we just had a 25% increase in volatility caused primarily by the break below, close below here. So as we press this level right here, I could be looking for support and then a potential buy signal at that zone. We stop on a dime right here at 110.23. We put in an engulfing candle right here. Previous support right there. Once broken, we break below, close below, anticipated resistance. Again, I want to see a qualified signal. Okay, there's a break below, close below, and again, now you'll see volatility is at 84. And in this particular case, it's at an 8-month high as we break below right here and we make new structure lows. So, price contraction right here, declining average true range right here. Those tend to run together. And you can use that average true range on any market, any time frame. So keep that in mind. Okay? Now, the other thing I want you to ask yourself is, where is price relative to? First thing I want you to ask is, where's the market relative to market structure? Look left, structure leaves clues. Okay? Look left, structure leaves clues. Number 2, I want to note, where is price relative to 120% of the ATR 7? We ran a volatility study, and it showed us that 80% of the time, 120% of this number contained price action the very next day. So, as an example, if the ATR 7 was 100, we take that number and we add 20% of the ATR. That would put us at 120 pips. So if price has moved 120 pips for this particular session, then we're likely approaching some type of a turning point based on historical volatility. Okay, so let's take a look at this right here. Okay, so let's say again, we're going to use the information right here. Here is 100 pips of directional movement in the market. If the market has moved 120 pips right here, or 120% of the 7-day ATR, then we know that 8 out of 10 times price will be contained by 120% of that ATR band. Now, with every 10% it goes beyond that, the probability of it continuing in that one direction is reduced. So, the same study showed us that 130% of the ATR contained price 84% of the time. So you can imagine this like a rubber band being stretched. And we use this to start building the strength of signal. So if price is at a previous structure support level, look left, or structure leaves clues, and at the same time, it also happens to be at 120% of the average true range, then we start to look for a qualified trading signal. And the basic theory I use here, gang, is this. If, then. Okay? 2 decades I've been teaching this. 2 most powerful words in trading. I want you to seriously use this every time you see a tendency in the market. Okay? What does the market tend to do when? Okay? A, when we're at market structure. B, you might look at it when an RSI hits an extreme, a stochastic hits an extreme, a MACD crosses over. Whatever that might be for you, ask that question. Okay? What does the market tend to do when? Then we come back in and we use the if-then statement. So for example, I can say if the RSI 5, which is the black indicator on the chart right here, hits extreme oversold, then ask the question, where is price relative to? Okay. If RSI hits an oversold condition, let's move this over here, and let's move this back down. So if RSI hits an oversold condition, now I want to assign value to that. And in this case, I want to assign the value of what I call SOS1. So over the last 20 plus years, I've been a part of or built hundreds of trading systems. And trading system language, technical language if you will, looks like this. It starts off with an if-then thought process. If RSI 5 is oversold below 25, then ask a question. Where's price relative to? Well, right here, price is right at a previous 1, 2, 3, 4, 5, break above, close above, 6, 7, 8 consecutive daily bar candles that tested that level, and you can see here contextually that price showed that it had relevance. In fact, the last time right here, you can see a very clear signal. Okay, so you'll note right here, there's my trade above, close above. We pull back down here and here. This is an inside bar. The low of this candle is contained by the low of the prior. The high of this candle is contained by the high of the prior. And then this candle makes a lower low and then fully engulfs, the body fully engulfs the body of the prior bar. Okay, so very, very simple, but very important. So contextually, once we broke above and closed above this 111.70 handle, we had the bullish engulfing candle that closed in the top 5%, and then this market ran 200 pips. Here we go extreme overbought, and then right there price makes a higher high, and we have bearish divergence on our RSI. And a month later, price comes roaring back down to this level, and it stops on a dime. Where? Right at 111.65, right where price had shown relevance here. Here we tested 111.65, we rolled over. 6 days later, we're 100 pips lower. And again, that doesn't sound like much. Our ATR is only 60. So we moved 200% ATR off of that level. So contextually, we want to look at it and say, okay, how did price respond at or near those levels once they were broken? Take a look at the next test. We pop up, pull back down. Okay, we open near the high at 1239. We press lower. We trade below the previous swing low. And you can see that this is a pretty significant candle relative to our current ATR. 112.44, 111.33. So we moved 106 pips. The ATR at the time was 67. Okay, so we won 130% of the average true range. Could they contain or maintain a held trade below? They could not. The buyers bid it up at this level. We rolled back up and we closed back above support. The next day we open at the same level. We close in the upper 20% and then again go back to retest previous structure. So as you look at your charts, it's important to ask yourself the question, what tendencies do I see? And again, those tendencies can be in A, price action. Tendencies can be in B, indicators. Okay? So one of the things as an example is right here. See that RSI overbought at 90? I want to look at the corresponding swing high that occurs at that level. So we went slightly higher right there and then pulled back. Price then comes back down. We make a higher low. Then we make a new structure high here, producing a higher high in price. And yet I've got a lower high on the RSI. relative strength indicator. The relative strength index measures the strength of any instrument relative to itself based on the average close and highs. So here we have a double top in price action. Okay, so a double top is a visual price pattern. For those of you that might like visual price patterns and price action type strategies, Bulkowski did a ton of research on this. Double tops and double bottoms are two of the more powerful turning point patterns. So if I just want to go find a double top, I could trade that as a pure pattern. Double tops are going to have two very distinct types. This one is counter trend. The market's making new structure highs and higher lows as we put in that double top. There will also be double tops that will be with trend. Okay, so a double top that's with trend, maybe the market's rolling over like this, price pops back up to a moving average, puts in a double top, and then rolls back over. The visual aspect is the same. Now, a lot of you have heard about, maybe even traded with, confirming indicators. So we've got what? Price action. Gang, price is truth. Okay? Price is truth. That swing high right there will be the swing high 5 years from today on that particular date. Period, over and out. On the right side of this double top, this one's a little more difficult to read visually because of the way the bars are put in. But note right here, we have a doji, basic candlestick reading, indecision. We have a lower relative strength index, which means the relative strength of the move to the higher highs is less than it was on the move to that swing high. Well, if I'm losing the underlying bullish momentum that drove us to here, then there's a chance that we might be approaching a turning point. Could be short term, it could be major. Okay, so what tends to happen? So now you start asking the question, if I see an extreme RSI, then I start to look for a double top. Here we put in a double top. If I see a double top, then I start to look for bearish divergence. So you want to link those two things together. Okay, overbought, link to bear divergence. Link that to the price pattern is the double top. Okay, so overbought, bearish divergence, double top. Overbought, bearish divergence, double top. What do I see? I see a double top. What do I see? I see bearish divergence after an extreme reading on my RSI. Number two, what does it mean? This is how you will build every system that you'll ever take a look at. Anything you ever participate in as far as coaching, anything you ever do independently on your own, please do it this way. What do I see? Make sure there's specificity there. Number two, what does it mean? The meaning that we attach to it, and this is critical. Not what does it currently mean to you, but what does it mean to an overall trading system? What tends to happen when you see that? If you see a doji lower close with a stochastic oversold, what does that mean to you? If you see a symmetrical double top at previous structure resistance, what does that mean to you? If you see a report about a stock or report about a currency, what does that mean? Okay? And remember, you are the ones that create that association. Period, over and out. Or when you come through a coaching program, somebody gives you that neuro association. In other words, says, Bob, when you see this, I want you to think this. When you see this, I want you to look for this next. And when you see this, and this all together, I want you to get short. If you're on a daily bar chart, I want your stop to be 1.5 times ATR. I want your target to be 1.5 times ATR on half and 4 times ATR on the other half. That, ladies and gentlemen, is a trading system. period, over and out. Now, what we don't know about it, we don't know if that bad boy is profitable or not. Okay? We do know, however, it is purely rules-based. If you're not trading right now with a rules-based system, please stop trading immediately. Okay? We have a big enough challenge in our lives with the psychology around trading. It makes it even worse and exacerbates it when we don't even have a system. We don't even have rules that we follow with any consistency and repetition. So, what do I see on the chart? Our stimulus, the information that we're bringing in, is always going to be visually oriented. Okay? You're driving down the street, you look up, you see a red octagon, 4 white letters. What do? Put your foot on the brakes. Automatic. In order for you to be a consistently profitable trader, you need a system that has a positive expectancy. You need to know the rules of that system verbatim, upside down and backwards, just like your favorite cookies, or just like seeing a red octagon with 4 white letters, which is a stop sign, and your foot automatically, subconsciously moves to the brakes. And then you need the discipline and the belief in the system to follow it with repetition, over and over and over. You can be the most disciplined individual in the world, Tony Robbins talking to you on the phone, telling you you're amazing, but if you have a losing system, you're going to lose money. You can have a system that averages 400 pips a month, but if you don't have the discipline in the system or the belief in the system to follow it, you're going to lose money. Over 2 decades ago, I started teaching and educating and coaching traders. 90% of traders or more lost money. We've got faster internet connection than ever. We've got better charting packages than ever. More whiz-bang new indicators than ever. More coaches than ever. And yet 90% of traders still lose money. Why is that? It's not because there aren't systems that work. It's because traders, people, don't have the discipline to follow the rules. Okay? All right, so what does it mean to you? That's Neuro association. And then finally, what do you do based on that meaning? This is the action step. You can sit there and never place a trade and you're never going to make any money. When you break the rules and you make money, that's actually negative because you're being rewarded for doing the wrong thing. When I traded proprietary traders back in the day, the worst thing that could happen to a new prop trader was for them to come in, they'd get a simulation allocation and start to trade. Almost everybody made money in the first 2 to 4 weeks in simulation. Once they hit specific metrics, they were allocated real capital. Not a ton to begin with, but every single trader, once they were allocated real capital, lost money. Why is that? How could that possibly be? Well, you know, the markets changed and more volatility came in and so said so-and-so about the markets, and then there was the Fed. No. You traded for 2 to 4 weeks. You saw all of the same numbers in the futures markets, all the same reports. The reality of it is it's the association with what meaning you put on trading losses. What meaning you put on actual money loss. What does that $500 loss mean to you? If that's a half of your rent or half of a car payment or whatever, this is why the psychological aspect is so critical. So my suggestion is that you invest at least as much time, but actually twice as much time, okay, to the psychology as you do to figuring out whiz-bang indicators. Because again, I could give you my #1 trading system today. I could teach you that trading system for the next 2 weeks. And yet if you don't have the belief in the system to stick with it through known drawdowns, they're eventual, they're going to happen, or the discipline to follow the flipping rules every single time. After 4 losers, you follow the rules of engagement. For the position sizing, for the rules, for the entry, for the exit. After 5 winners, you follow the rules of the flipping system. For the position sizing, for the entry, for the stops, and the targets. And when traders don't, which 90% of them don't, traders lose money and they fail. That's again why the numbers haven't changed in 20 plus years. Okay? It's the same thing that we deal with, and you all know it, I know it. We all set goals and we set New Year's resolutions, and the statistics are exactly the same as they were. Go pick up a USA Today from 15 years ago and look at the number of people who set goals or set New Year's resolutions, and then read it 60 days later when they go back to those people and ask them how many of them are sticking with them. 10, 15%, maybe 20. Follow them another 60 days, guarantee it's below 10%. It's just the numbers. We lack discipline. Okay? So, you need to have a system that makes money or a signal, whatever it is, and then you have to have the discipline to follow it. So ask yourself, what do I see on the charts? That can be indicator-based, price action-based, or both. What does it mean to me? Okay? And then what do I do based on that meaning? Now we've produced a trading system. So here, what do I see? I see an extreme reading on the RSI. What do I do based on that meaning? I start to look for a swing high or a double top. If when the double top hits on the right side, I have bearish divergence, now I start to look for an entry. If I'm aggressive, I just sell at market. If I'm more conservative, I wait for some type of a price action signal. Okay? So here, again, this one's a little more difficult to see because it's only a 5-bar pattern, but here I clearly get a DLC, a doji with a lower close. So if I sold the next bar at market, I come in here, grab the old ruler, I'd be short right there. I'd know that my signal occurred the day before. My minimum protective stop has to go above the swing high right here. So what's my risk? 89, so I'm going to take it to 100 pips. Now, remember, at this time, we talked about average true range. You can see the average true range when I got my signal was around 70 pips. So if I used 150% of 70 pips for my stop, it'd be 105 pips. 70 times 150. If I used 150% ATR as my target, it'd be 150 pips. So from 112.43, I need to see something a little below 111. Right there's 162. Did my target get hit? It did. Were my stops hit? It did not. In fact, I've been calling this bad boy a no-pain train. From the point of entry, there's no pain. It just heads straight in my direction. Now, if I take a look at that big fat candle and I go, woohoo, I'm up 80 pips day one, I'm going to take it. And then I start to have negative internal dialogue. Well, what if this thing turns around and goes against me? I mean, they've talked about support and resistance. You can clearly see that we've got support coming in right here. You know what? He said, follow the rules. I'm going to stick with them. Show my discipline. Boom, the next day we come down and we do test that area. And in fact, right there is where we get close to our target. And then I see this pin bar set up and I'm like, wow, they rejected it. The buyers came in, bid it up. We closed in the top 20% of the candle. Okay, I got to exit right here. How far did we actually get from the point of entry? Let's come down here. Our maximum favorable excursion on the sell, 259 pips. Okay, so again, let's go on the bar right here, the signal bar. We had an ATR actually at 65. So we moved 4 ATR from that overbought bearish divergence 2-bar entry double top. Now, what do we see right here? Do you see that? Here's a double bottom right at support. Well, great. Do we trade that one? Let me ask you a question. Were your rules met? Do you see an extreme oversold condition on the left side? You do not. So I don't have a trade. So I come down, I skip the trade because my rules call for me to skip the trade. We open right here. It looks pretty good. And right there's what it looks like in real time. Oh, I don't know. Should I take it? We just now went oversold. Okay, there's my oversold condition he talked about. Let me see if we come back and retest it and put in essentially a triple bottom. Next bar. Oh, man, there it goes. I beat myself up. Coulda, shoulda, woulda. Man, I could have been long right here from 110.57. I would have been up 70 pips at the close of this day. We took out the highs of the last 5 days. We're probably going to easily go back and retest 111.80 on this chart. What was I thinking? Well, you didn't have a signal based on your trading plan. So I disassociate myself from any feelings or emotions about the missed trade opportunity. Next day, next day, next day, next day. Now, because I missed that one, maybe I force myself to get into another signal. Okay? Very, very important. All right, so if this, then that. If this, then that. Number 2, recognition, tendencies. Okay? What do I see? What does it mean? What association do I place on it? And then what do I do based on that meaning? So let's come in here and let's grab our vertical line. And I'd encourage you strongly to do this independent of what we're doing here. RSI's overbought right there. Did we catch at or near a high? We did. RSI's oversold. Did we catch at or near a high? We did. RSI's overbought at or near a swing high? Yeah. We went about 6 pips higher, pulled back right here, about 1 ATR, 70 pips. Right here, overbought. Did we catch a swing high? We went higher here and then put in a double top with the bearish divergence. So there's the bear divergence right there. From the absolute high at 1264, we went to 1317 before the turn. Extreme oversold condition here. Did we catch at or near a swing low? That's a 5-period RSI. I've got a sideways trade right here with volatility. We're well inside of my normal ATR ranges. So now I'm starting to see a tendency. Does it work all the time? It does not. Okay, let's go back here. There's an oversold condition. Do we catch a swing low? We do. Market makes a retest, then we go a new structure low. It's oversold right here. Catch near a swing low. Oversold right here. Do we catch near a swing low? We do. Oversold right here? Not quite. So there's a double bottom with bullish divergence. Let's look at it. Okay, now, based on what we just looked at, what are we missing? We just created some rules on the fly. We said if RSI is oversold, then. So let's take a look. If RSI, I'm just going to say extreme. Okay, then. And in this case, I want to wait for a swing high or low. In this case, we're going to wait for a swing low. The market's in a bear continuation pattern. Okay? Now, what am I going to look for after this point? If the RSI is at an extreme oversold condition and we just put in a swing low, I want to look for a retest of the swing low. And when that retest occurs, if it does, I want to see RSI bull div. Bullish divergence in the RSI. Okay, so let's have a look. Did we put in a swing low right here? Yes, we did. In fact, we go swing low. It's a beautiful looking pin bar. We pop back up. We make a higher high, higher close, higher high, higher close, higher high, higher close, and put in a swing high. So we have a 4-bar rally off of that extreme oversold condition. Number 2, from the swing high, we come down 1, 2, 3, 4, 5, 6, 7 bars. We put in a retest of the low. Now I want you to look at, visualize, burn that into your memory. Number 1, I've got a symmetrical double bottom. From the swing low on the left side to the swing high back down there. Okay? Number 2, At the time that we retest the prior swing low, I've got nice bullish divergence on the relative strength index. Over here we were at 11. We're retesting the previous swing low, and right here we're at 25. Bullish divergence. Now, if I'm aggressive, I would buy next bar market. If I'm more conservative, I might wait for a close back above the high of this candle. So one of the ways to enter this would be take the highest high of the signal bar, 106.30, and let's just add maybe 10 or 20% of the average true range. Okay, right now you can see we're at 92 pips a day. 10% of that is 9, so let's add 10 pips. 106.30 plus 10 is 40. I'm going to place a buy stop at 106.41. If the buy stop is filled, I'm going to take the low minus 10 and place a sell stop for protection right there. I'm going to consider at least a 1-to-1 risk-reward ratio right here, and that'd be a retest of previous structure. Again, this is counter trend. Next bar, do I get filled? I do not. Now, in some trading systems, we say, especially on this one, because we anticipate kind of a mean reversion. If you can imagine, a moving average would be rolling over, coming down like this, a 200 period, a 233 EMA. We'd anticipate maybe this market could revert back to the mean or back to the moving average. Okay, so in some cases, we'll simply say, if we get the signal here, then place our entry, our stop, our target 1, and if we're not filled on day 1, cancel the trade. Okay? Next day, we get filled right there. So as soon as 106.41 is traded, my buy stop becomes a market order. Now we're long. Our protective stop is down here, and we're risking 130 pips. Market comes back down. It retests the previous swing lows. Aggressive counter trend. Back up, little bit of indecision. Look at volatility. ATR is declining. Okay, we had a double top here at 104 pips. Now we're down to 80. So we've seen a 24 pip decline, about 22%. Still in the trade. Higher high, higher close. Now for my entry at 106.41, my maximum favorable excursion has been about 68 pips. That's the highest high if we're long. And now I can start to look at trailing my stop. Inside bar, can't get any follow through. RSI right here popped back up. Relative strength held at that previous swing high. If I trail my stop, I'd put it below this little guy right there. Okay, we opened at the prior session's close, popped intra-bar, we made new structure highs, could not sustain a held trade, price action pressed back. This price action bar right here, I'm not real happy about that. Time to reduce risk, trail stops. Nothing, sideways, nothing, sideways. Kind of a good looking bullish candle here. They pressed it lower, didn't hit our stop, pulled it back up, closed it near the highs, and right there we get stopped out. Okay, so this, traders, is what I call an aggressive counter trend, and this would literally be an SOS 3. Price is rolling over hard. We made new structure lows. As the price is declining here, average true range is increasing. Okay? We do get the extreme, we do get the double bottom, we do get the bullish divergence, but as we look left, you see I've got no structure. We're on new lows for the session, or new lows for recent price action. So adding in structure relevance is really key. Let me go here and grab the data series. Let's go back. Let's go 9 Hunsky, and then we'll look left and see if there's anything there. Yeah, so see that? It's new 16-month lows. So that's one of the things that you want to consider. The primary thing I wanted to share here was the if-then thought process, the power of neuro associations. So all of us deal with exact same information. This is your trading brain. Okay? Information enters your trading brain based on visual stimulus, what you see. So as I coach and I teach traders, traders see the exact same information on the chart. All of you all just saw the exact same information. Once that information gets in here, here's where we have the opportunity to really let things come off the tracks. This is where the consistency is necessary. Again, I show this same chart to 500 traders that are taking my course. They all see the exact same thing. If none of you know my system, then you're going to make different decisions based on what I just showed you. For some of you, you don't do anything because you're trend traders. Well, I'm not going to do anything. In fact, what I'm likely to do is wait for this thing to pop back up to the 233 EMA. I want a 2-bar reversal pattern, and then I'll get short. The thought of trading counter trend makes me sick to my stomach. Okay, great. Others are aggressive. You like the counter trend trades. Your thought process is, I'd much rather be long from down here because that's my lowest risk point of entry, and then possibly profit all the way back up to here. This is all going on inside of the brain, that area between your two ears. Okay? Now, what comes out of this, okay, Stephen Covey says, stimulus, between stimulus and response, between input and output, lies our freedom to choose right here. What does it mean? Think about it when you look at politics. Think about it when you look at religion. Think about it when you have conversations with a spouse, significant other about finances. Okay? We see the information and then it goes in. And guess how it's filtered? It's filtered based on your current belief systems. What you believe to be true, based on current evidence and information that you've gathered at this point in your life, right now as a trader, right now on your diet, right now as a mother or father and how you deal with your children, right now in your parish, whatever it might be. So you're going to take this information and it comes in, and then you're going to make a decision. And based on that decision, you're going to come out here and you're going to act. What do I see? Visual stimulus. What does it mean? What meaning have I placed on it? And then what do you do based on that meaning? Every single system you will ever try, every coach, every strategy, all breaks down to this basic foundational truth. Period. You can't get away from it. If you buy a mechanical system, if you purchase an EA in the past, it's the same formula. Information comes into the EA becomes your brains, and it has no fear, no greed, no emotions at all. So the EA processes all of that data, removing the emotion, and then it spits out a signal. And yet even in proprietary trading rooms, even with systems that have a profitable outcome, traders still find a way to screw it up. All you have to do is go back to the turtles experiment. Most widely known and powerful evidence that traders can be taught to trade, but also important evidence that when a system works and traders don't follow the system or amend the system, the trader can still blow up. So the thing that you have to do is you have to commit to managing this area right here. Here's your ear, here's your other ear. So when I say that we're literally 6 inches away from trading success, that literally is what I mean. Now I've got a big old fat head, so it might be a little more than 6 inches. But it is this area right here where you need to invest your time, energy, and focus. You need to forget about this area for a little while possibly. Because if the information comes in here, you goof this process up right here, the output is going to be wrong. And when the output is wrong, that's what leads to trading losses, if it's in a sim account or if it's in live account. We recently did a survey at our firm. 1,500 plus people responded to the survey. The main question was, what's your biggest challenge in trading as we go into another year? Over 70% had something to do completely or partially, at least 50%, with discipline. So when I ask that question, and 1,500 plus traders respond from all over the world, some of them have $487.50 in their account, and they're trading microlots. Some of them have $250,000 in their account, and they're trading all three major markets, stocks, futures, and Forex. And yet they all deal with the same thing. And then I tell them, well, look, what you got to do then is you got to, stop trading immediately. Gang, I'll go a little bit deeper right here just for the purpose of this. Okay? Tony Robbins kind of created it. Neuro Associative Conditioning. N-E-U-R-O. Neuro. What do we associate? And then conditioning. What do we condition? So, the very simple one is, when I see puppies being hurt on a commercial, okay, the information enters my mind via my eyes. And then, of course, you hear the little puppies. I have a negative neuroassociation with that. I love dogs. Okay? So, tears come to my eyes. And I think immediately, how can I help? That's my conditioning. Every time I see puppies in a bad way, I've created that association. It's automatic. Just like when I smell pizza, when you smell cookies, when you see a trade that you think should work, but you haven't put in the time, the energy, or the effort to backtest it, to see if it even provides you with a positive expectancy. Okay? So, with neuroassociation, now we talk about habits. And from 0 to 7 years old, we develop the majority of the habits, the things that we are accustomed to seeing. And in trading, every single thing that you think right now about trading, whether it's true or not, whether it works or not, needs to be broken or at least possibly amended, unless you're making money as a trader. And we know that among those 1,500 people, none of them are. And yet they were open and honest enough to share the reasons why. So, over the next couple of weeks, I'm going to be doing some teaching and training on how to overcome those things. But again, you are the one that has to be willing to take the action. Neuroassociative conditioning is the most powerful method of change that I'm aware of. So what it says is, look, we can take the same stimulus and bring it in. Okay? And then if we change the way we process that information, in other words, I might want to change an association. I may want to say, you know what? If I hear these words, I typically get really angry and really upset. But I've chosen now to see that that doesn't serve me, because the stressors it creates physiologically in my body are overwhelming me, and they're doing horrible things to me internally. And because I want to live longer, healthier life, I'm making a choice. Now, is it going to be easy? No, it's not. Studies have shown it takes 18 to 30 days. Okay, we'll say 19 to 30. It takes 19 to 30 days to basically create a habit. So most of our coaching, we do 60 days. We take that 18 to 30 day period to break the bad habits, 18 to 30 days to install new habits. But you need to know this is why traders struggle. It always has been. It always will be. Your success in this business is going to be directly related to your ability and decision to manage this area. Now again, you can be the most disciplined trader in the world, and if your system doesn't have a positive expectancy, you're still going to lose money. Okay? But if you do have a system that provides a positive expectancy, and you're not investing time here, you're doomed to repeat what you did last year. Period, over and out. It's been that way for 2 decades. It'll be that way for the next 2. And by the way, it happens to be that way in life. So if in that first 0 to 7 years I was telling you about, if I heard things when I was 4, 5, 6, and 7, well, money doesn't grow on trees around here. And if the constant conversation in my household was about lack, don't have enough, that is drilled into my baby little subconscious mind. I don't have the appropriate thought process to make a decision about whether or not I choose to accept that as fact or not. It just becomes that way. So then I have to work to reprogram my brain to move myself out of that. That's why we celebrate people who had tough upbringings and beginnings and yet have found a way to be successful. Because it is amazing to overcome that programming. We have a conscious mind and we have a subconscious mind. And right now, about 90% of what you do every single day in your life is being driven by your habits, which is at your subconscious level. So, you've heard the term, right? Monkey see, monkey do. If what you're doing right now ain't working, stop trading immediately. If you continue to trade and continue to lose money, continue to make mistakes, continue to feel the frustration, even if it's in a sim account, all you're doing is further embedding the negative neuroassociation. And your internal dialogue, what goes on inside your head is, nobody's making money in this damn business. There can't be. Look, I'm an intelligent person. I own a company. I've built a business. I'm a manager at this firm. I got great grades all through high school. Whatever. I'm a Mensa Club member. None of that has any impact on your ability to be disciplined and follow rules. Period, over and out. Okay? So, to get back to the basics, it's literally this simple. If this, then that. And when I'm writing code, or back in the day when I did, and when the programmers do now, they say, if the RSI goes oversold, then I want you to look left and see if you can find a swing low in the last 35 bars. So, let's look left. Do I see a swing low in 35 bars? Okay, there's 31 bars. I don't see a single swing low. I see plenty of them, but they're all the way up here. There's a 3-bar swing low, 3-bar swing low, 3-bar swing low, 5-bar swing low, swing low, swing low. Nothing even close to this guy right here. So immediately I can see the first piece of my criteria. I want to find an area where traders have bid this market up in the past, and it's got to be a recent past. I can't even meet those criteria. So if the balance of the information I require, the double bottom with bullish divergence, if those things are met, I can't take the trade because I'm missing the most important piece. That's support. So when you take trades, you're typically going to A, break a rule. You're typically going to respond based on your most recent 4, 5, or 10 trades. If you've had a string of winners, you're more likely to increase your position size, let a trade run to get a bigger profit maybe, or take a signal that you most likely would not have taken if you just come off of 4 losers. So I encourage you to do this. Write this down. The signal is the signal is the signal. Period, over and out. There are 3 positions in the market: long, short, and flat. So your system either generated a buy signal or not. You either took the buy signal or you didn't. Your system either generated a short signal or it did not. If it did, you either took the signal or you didn't. And if your system has no signal, then you should be flat. When you're on the sidelines, your capital is not exposed to any risk. When you run out of capital, you are out of business. Okay? It's like going down to fill the car up with gas and the gas station's out of gas. How's that possible? You're a gas station. You sell gas. You're a trader. Trading requires capital. Okay? The signal is the signal is the signal. And for best success, again, you need specificity. trillions of neurological signals and impulses going on inside of our brain every single day. Other distractions, other things. You need specificity. Again, the only reason any of you can go out and drive a car today is because you have confidence that the other people in the cars are also going to abide by the red light, the green light, and the stop sign rules. If you didn't have that confidence, you'd never leave your house. Okay. So, the if-then thought process, that's where everything starts. If this, then that. And you're looking for tendencies. Okay? Number 2, signal stacking. Visual price patterns with technical indicators applied. 3 market positions, either long, short, or flat. And what do I see? Primary way we gather our information as traders goes into the brain. What does it mean? You associate and create those associations of the meaning, and then what do I do based on that meaning? If you've just gone through 4 winners, you do the same thing. The signal is the signal is the signal. Trade the signal. If you've just gone through 5 losers, the signal is the same, and your action should be the same as well. Okay, so there's a cursory overview of some neuroassociative conditioning practices, a base idea around system development, and the power of that area between your 2 ears. In the next lesson, I'll go a little bit deeper and I'll introduce you to SOS and show you how we build trading systems, and I'll show you a couple of things that you can do immediately to take action on that neuroassociative part of your trading brain.